New friends, new opportunities, new partners. EG Tax.
Hi, I'm Esther Golias, the Tax Lady. This is Ask the Tax Lady, and I'm from EG Tax, and this is tax season. If you see the Tax Lady, you know it must be tax season. And of course, this show is all about answering your questions. And with my two buddies here, Chris Fabian, Tiffany Fabian, and we are from EG Tax, and we are showing you just how to think about your tax return so you understand what to do. And I will tell you, if you hear something that we're talking about and you think, gee, I wonder if I did that wrong in the past, like Tiff and Chris have said on the other shows, amend your tax return and straighten it out. We're here to help you.
I met with a client the other day, and I did his rental during the tax season, and he was reviewing it. We did an extension, so he was pushed. And so he went home and he reviewed it, and he was like, I listened to your radio show, and there's a safe harbor provision. And you didn't, I go, but I couldn't take the safe harbor provision because it was all 27 and a half years things.
Right.
And he says, oh, well, I lumped it together. Really, there were some 7-year items. And I said, let's amend it.
Right.
But people listen.
Well, that's good. We love
Yeah,
that.
yeah.
Well, I'm Esther Gillies, the Tax Lady from EG Tax. Our website is egtax.com. We have 30 area offices to serve you, and we're going to take a short break and be back with your questions. So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. EG Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call R.J. Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let R.J. Gullo Companies put their 40 years of experience to work for you. Call R.J. Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.
Hey, I'm Esther Gillies, the Tax Lady. Welcome back to Ask the Tax Lady. All right, we have Dominic, our roving reporter, out talking to you right now about your tax questions. And so, Dom, we're going to go with our first question of the day, which is?
Hey Esther, this is Dominic, and we have another email coming in from Vincent from Tonawanda, and this is what Vincent says. We sold some stock last year, and now I'm wondering how much it will hurt us. Originally, we paid $25,000 for this stock and sold it for around $40,000. The only other income we have is Social Security of $30,000 a year. What do we do this year?
Okay, so good news for this couple, because the sale of a capital asset has like its own set of rules, and it isn't taxed like ordinary income. It's taxed as a sale of a capital asset. So the difference between what they paid for it and what they sold it for is the
capital gain, which will show on the Schedule D, sorry, for about a roughly $15,000 gain. That's the bad news. The good news is there's going to be no tax on it.
That's right. exactly right, because
They get-
the capital gain rate at that level would be 0%
Yep.
of the gain. So you're gonna pay 0% on that $15,000 gain. Social Security's not gonna be taxable, so you're gonna pay 0 taxes. That's the good news on the federal. However, we do have New York State, which is a completely, a
is.
different set of rules, so.
And so on New York State, they're going to have to pay tax on their social security, 0. All of their social security is tax-free. However, on that $15,000 gain, they're gonna have to pay, is it about 4%?
Actually, with their standard
Actually, their standard
deduction,
deduction
it's
will
gonna
get them
wipe
out
it
from
out,
under.
so-
Yeah, they'll be in
Okay,
good shape.
okay.
But on
So
an
that's
average
good.
person,
Right.
it would,
Right, had the
There's
gain
no
been,
tax.
had the gain been a little higher, they would have been, even though the federal would have forgiven
if
it, the
they made
state.
$10,000 in wages,
right.
then there would have been taxable
Right,
stuff on it.
so, good news, you own nothing. And by the way, that's one of the good things about tax planning, is if you have an event happen during the year, you can call us and we'll tax plan for you, and maybe in this situation, they could have taken more out
More
of
out
their
of their
IRA.
right.
Because the standard deduction is so high, the tax rates on capital gains are so low, you'd be surprised what you can do if you ask, right?
And, you know, and one thing, what you talk about tax planning, especially with these people who are on Social Security, you have to, within the last couple of years, IRMA has kicked in, which is the cost of your Medicare insurance through your Social Security. And so they're looking at your income on your tax return. So that's really where people have to, the seniors have to really do a lot of tax planning, because you could sell a rental property, you could hit that casino, and now your Medicare insurance would go from $135 a month up to maybe $400
But-
a month, depending on your
But-
income.
And they take it out of your
And
social
they take it
security.
out.
But make sure you give us a call. There's an exception if there's a unusual event, and so we can help you fight that.
Right, that's
Right,
exactly right.
but do the tax planning so you're
Right.
not
That's
surprised.
exactly right.
Right.
When you get a letter saying it's going up $200 a month.
Absolutely.
But
right.
don't always accept it, because
Good.
we'll try to fight it for you.
All right, and we're definitely fighters, and
As
we're
you
gonna go
can tell.
back, and Dom, we got another question?
I am a small business owner. What exactly is a pass-through anyways? Is it good?
Okay,
Pass through.
all right, so, this is how the change in the tax law is absolutely unbelievable. So, this year you lose your personal exemptions, your standard deduction is higher, and so, or itemized deduction, so there's your income, less your personal exemption, your standard deduction or itemized deduction. We got left is taxable income. Then the pass-through is determined. Now, as a small business owner, the first thing you gotta say is, do I have a net profit? Because if there's no net profit,
There's no pass
There's
through.
no pass.
there's no pass-through. So if you're a small business owner with a net profit, then on your net profit, you're gonna get a 20% deduction, provided your income is not over $350,000 to $450,000 if you're filing a joint return, and you have the right business category. So if you're under those thresholds, you're gonna get a 20% after your standard deduction or itemized deduction is applied, provided another thing, do you have any other source of small
Right,
business?
'cause
Like
you have to
maybe you would have
commingle them.
another business or a K-1. All of those get netted together and then the 20% is applied. So what does it say? So if our small business owner has a $100,000 net profit, if that's it and he's under $350,000, he would get a $20,000
That's
deduction,
huge. Yeah.
right? But
On the
on New
federal.
York State, nah, don't get anything,
Right.
right?
Yep.
Okay,
So,
all right,
so the pass-through though, also,
is a good thing.
it's a great thing.
And it's good for landlords too.
Possibly, that's
Right,
what I was
possibly.
gonna say. Because they say, oh, rental properties qualify. Rental properties have to be your business.
Right.
It can't be, oh, I have a upstairs that I'm renting
A
out.
flat,
A
yeah.
flat. Because that's not your true income. Your true income would be your job.
But if
So-
you had like 10 rentals and they weren't commingled and you conducted them as a business and it had a net profit, which
Right.
rentals usually don't have, right?
Yep, yep.
Then you would get 20% of that as well. I have one client of mine that has like 50 rentals and he has a substantial net profit, around 200,000. He does conduct it as a
He
business.
would-
He would get a
Yep.
$40,000 write-off then.
Right, and that big thing you said is conducting as a business. You have to, separate checking account, separate, you have to make sure you're running it.
Well, and
like-
this is his only source
Right,
of
right,
income.
which this is
Yeah,
for him,
So
but I'm saying
you want to
the
make sure.
other-
But the thing is, if you're not sure, give us a call. We'll help you to kind of,
Sort it
you know,
out.
maybe this year you won't qualify because maybe you have been commingling funds and you haven't set it up as an LLC and there's some things that you need to do. We'll help you so that you can take advantage of that deduction, right?
And, sorry, this pass-through is just so big. If you have a loss this year on your Schedule C, so say you lost $20,000.
So our
in
guy,
business,
let's say, had lost 20,000.
20,000. There's no pass-through because it's a loss.
Right.
But that loss carries forward for the pass-through to next year. So
Yep.
if he has a $10,000 profit next year thinking, okay, I'm gonna have a $2,000 subtraction. No, you're not, because you're gonna have, that loss is gonna offset. You're
Your
still gonna pay
future.
tax on the
Your ability.
10,000, but it's gonna offset your future 20%
Absolutely.
pass-through.
And the other thing is you want to make sure that you take a look at your business codes because only certain businesses, especially if they're upper income, will qualify for the pass-through.
Yep.
So,
Dom, you wanna
okay,
do the
Dom,
next
we got another
question?
one?
Hey, Esther, I have another email coming in from Sarah from Williamsville. Sarah says, I make money selling health products. I mostly use them myself, but my friends also place orders through me, so I end up with income each year. Is there anything new this year for me for this type of business?
Wow.
It sounds like I mostly use them myself, but my friends also place orders.
Right,
So
so
it sounds like it's a
hobby.
hobby. It sounds like it's a hobby. So that income, and I think the reason Esther chuckled is that income would go on line 21.
If there were a line 21.
Right, and then you used to be able to take them as, up to your expenses as a miscellaneous deduction on the Schedule A, but that's gone. However, it's still there for New York, so.
Well, I guess what I would say to our taxpayer here is that if you're not in a business to make money, if it's a hobby, or if you have rental property that's rented below fair market value, this is not a good thing on your federal return because right now, there's no way to take the expenses. The income's going to be taxable, the expenses won't be deductible. So it's like shooting yourself in the foot. So in this situation where this taxpayer's really just letting their friends kind of piggyback off them and they end up with some income, I would suggest you tell their friends to go find their own healthcare person if you're not going to try to be making money, because really you're going to end up getting stuck paying taxes on it. So it's not good.
Right.
So that's what I would suggest.
Yeah.
So I guess you have to make that call. Say, I talked to my tax advisor, and you're going to have to go get your own vitamin B1 from somebody else. All right? All right.
So-
All right. Yes.
And
Yeah.
what were we gonna say, Chris?
Oh, nothing.
And then I was gonna say, I'm just talking about your 20% pass-through. I never thought about what Esther said about the business codes. We really gotta pay attention.
Oh, it's very important, business
Never-
codes, because if you're an accountant
Yeah.
and your income's over 350, you don't get the pass-through. If
Right.
you're a tax advisor, same thing. If you're a stockbroker, same thing. However, if you're an architect, over 350, you would. So different business codes. You want to make sure when you're getting your K-1s that the business code is in there because that'll determine whether you can take the pass-through depending upon your income. So that's really, really, really important. I'm Esther Golias, the tax lady from EG Tax. We'll be back on the other side with your questions. So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. EG Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call RJ Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let RJ Gullo Companies put their 40 years of experience to work for you. Call RJ Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.
Hey, I'm Esther Golias, the Tax Lady. Thanks for joining us on Ask the Tax Lady. I got Tiffany Fabian and Christopher Fabian here with me, and we're helping you to answer your tax questions. We're here every Wednesday and on Saturdays from 3 to 4 on WBEN, and we're on BBC on Wednesdays. So and by the way, you don't have to wait for a TV show or a radio show to ask a tax question. You can go to our website at egtax.com. We're there to help you all the time, 24/7. All right. We got Dominic, our roving reporter, out in the field. Dom, what do we got?
If I have itemized in the past, will anything change for me? I'm single and own a home.
Mamma mia, yes. Is it, since Dominic's Italian and I'm Italian,
Well,
there's such a change.
I think it also matters, we should first start if they're single, or if they're married, or if they're head of household, but yeah, there's a lot of changes.
Yeah, okay, so for a single taxpayer, there's no personal exemption, your standard deduction is $12,000. So it's comprised of the following categories. Charity, medical, over 7.5%.
Correct.
So this looks like a young person, doesn't look like they're gonna have medical, but they could if they
You
had
never know. I mean, they could
braces or,
yep.
right.
Bad insurance, where they have a
That's
$3,000
true.
deductible.
Taxes, all right, and the federal government has put a cap on taxes, so you can take your property taxes, your state withholding, your sales taxes, foreign taxes paid, up to $10,000. So assuming our taxpayer has that, and he's capped at 10, he's got 10. All right, then there's interest on your primary, secondary mortgage, and due to acquisition indebtedness, which is a fancy word for buying your house or remodeling your house. So whatever they had in mortgage interest, so let's say his mortgage interest was $4,000, so we'd be up to 14. Then there's charity, with casualty, if there was a casualty, but let's
A
assume
nationally
not.
declared
Right,
disaster
and
order.
let's say he's in Buffalo, so there's no
Right.
casualty. Then there would be charity, so maybe he cleaned out his closet, gave to Goodwill, Salvation Army, maybe that's $1,000, so he'd have 15,000 in itemized deductions. The miscellaneous itemized deductions are gone.
Right.
So in this case, this taxpayer would be able to itemize because it's over 12.
Right,
Right?
and then they're gonna
On the
itemize
state of New York,
on the state.
however, he also would itemize, they would also itemize on the state of New York, and the state of New York would not cap the property taxes paid.
Right.
And the state of New York would not cap the type of mortgage indebtedness.
And they could take their
right?
job expenses.
And they could take their job expenses. So on the federal, they might have 15,000. On the state, they could have more in itemized deductions. So you actually have two separate type of tax returns to do.
So when you started off by saying "Mamma Mia,"
That's why.
You were right.
Yeah,
You were
Mamma
right.
Mia.
Okay,
It is a
Mr.
Mamma Mia
Dunn-
kind of year.
Dunn-
But now, that was a single person.
Right.
Oh, yeah.
So if they were at 16,000, he'd still be able to itemize. But if this was a married couple.
Right.
Who was at 16,000 last year and able to itemize.
Right.
They wouldn't be able this year.
On the federal.
On the federal.
But on the state, they could.
Yep,
So,
definitely.
it just has to do with your filing status. But yes, you gotta work it out, and on the state, you're probably gonna be able to itemize, if you did last year on the federal, you'll probably be able to itemize on the state.
And then also, the new home buyer credits, not the new home buyers, the energy credits are gone. No new windows, no front door, no garage door.
Only solar.
Yeah, just solar.
Only solar
Right.
is there.
And, sorry, speaking of itemized deductions, the change in gambling losses.
Oh, that's true.
There's a big change for gambling losses, which now you can deduct your transportation,
You can still deduct gambling losses
s-
up to your winnings.
right? But you now can include that in your transportation costs. So if you fly to Vegas, you drove to Atlantic City, you drove to the casinos, you had the bus rides to the casinos locally or in Syracuse. that could go as part of your losses up to your winnings.
Right, so let's say you were really lucky and made 100,000 at the casino, you got miscellaneous income. You could take your losses up to the income of 100,000. Let's say you only have losses of 50,000. And so what you'd be able to do, like Chris is saying, you can then take your travel to get there.
But gambling winnings is really not so exciting for a senior because it always makes more of your social security taxable. So,
Correct.
Taper it if you can.
Right. Okay, let's go back to Mr. Dom.
Dominic?
I have to take an RMD because I am over age 70 and a half. I really don't need the money and I would prefer not to take it out of my IRA. Can I just ignore it?
Well, you can ignore it and it'll cost you 50% of the money you didn't take out. So ignoring your RMD is not a good idea. So your required minimum distribution, once you're age 70 and a half, is based upon your life expectancy, okay? And you're required to take it out. So if you're required to take out 20 and like this taxpayer says he doesn't want to, if he left the 20 in, he'd pay a $10,000 penalty. That would be not good. So it's much better to take the money out even if you don't want it, you can put it back into another investment.
Right.
Yep.
Right? So, and remember, you can also do the charitable rollover from the IRA to fulfill the RMD if you're a giver. Like, let's say that you're going to give $10,000 to your church. Your RMD is $10,000. If you call your broker and say, I have that IRA, my RMD is $10,000, I'd like you to give it to St. Peter's and Paul's Church. They take the $10,000 and give it to St. Peter and Paul. You've fulfilled your RMD and you pay no taxes. So that's a way around it.
Right,
Yep,
so
yep.
it doesn't, so what Esther's saying is, it won't count as income on the 1040, and you don't get the deduction.
But they weren't going to get it anyway.
Possibly, under the
Possibly.
new tax reform.
Right.
But
I mean, and with the $24,000 standard deduction,
For a married
it's
couple.
so much.
Right.
It's so much of it's so large of a figure. You still wouldn't, it doesn't benefit you unless you do that rollover.
And then with that being said, if you are taking RMDs and you don't roll it over, you've really got a plan, because it's probably gonna, depending on how much you have in your IRAs, it's gonna make more of your social security taxable, and you really wanna give us a call to find out what you should do in withholdings and if you should adjust
And there are
anything.
many people that are doing RMDs, and what they're doing is they're only taking out the bare minimum, and they're not paying taxes. Well, you can take out more than what they require.
Right.
A lot of people say, oh, I'm doing Roths because they're not going to be taxable when I withdraw them. But the truth of the matter is, many people can take far more money out of their IRAs and annuities and not pay taxes at all. And so it's still tax-free, and
Right.
it isn't a Roth.
I was
Right.
just gonna say that take advantage of the tax law and take more out, because it's the minimum, required
Right.
minimum.
Right.
You
And
can
then
take more.
More.
I was doing tax planning yesterday with a different client, and he's retired. He's 72, although his son pulled him back into working again. And his wife is 8 years younger. And so we talked about putting money into an IRA for her on the tax return, and she's still entitled to. So there's an IRA adjustment to income, and we ran the numbers, and he's like, that's a good idea.
exactly
So
right.
he's going to put money into a
I
traditional
can't,
IRA.
I can't
for her.
stress how important it is to tax plan.
Right.
Because you can, something as simple as doing this charitable IRA rollover, I mean, it's just, but ignorance is not bliss when it
Right.
comes to taxes.
No,
Right?
No, you don't want to bury your
Right,
head in the sand.
and you don't, if your minimum distribution is 10,000, you don't have to give the whole 10,000 to
Right,
charity. You
right.
can give 2,000 to charity and take the 8,000.
exactly.
It doesn't have to be all of it.
Right. I mean, we're not saying that, everybody needs to be a philanthropist, but if you are so inclined, don't have the income end up being on your tax return.
Right.
I'm Esther Golias, the tax lady. You can see the way we think. It isn't easy, because if you really want to maximize your deductions, minimize your tax bill, maximize your refunds, you really got to know what's happening. EG Tax is there for you. Our fees are the lowest in the industry, and I don't know if you can tell, we really care.
And-
We're going to take a short break. We'll be back on the other side with your questions. So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family. Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family. Why is it when we think of our family, we always do what's best for them? Like when there's a problem with your kid's teeth, you call the orthodontist. Problem with the car? Call the mechanic. So why, with the largest tax law change in decades, would you even think about preparing your own tax return yourself? A mistake could cost you thousands. EG Tax has studied these tax law changes since their inception. We're going to work hard to make sure you get the biggest refund possible. This year, come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call R.J. Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let R.J. Gullo Companies put their 40 years of experience to work for you. Call R.J. Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
Hey, I'm Esther Golias, the Tax Lady. Thanks for joining us on Ask the Tax Lady. I got Tiffany Fabian and Christopher Fabian here with me, and we're helping you to answer your tax questions. We're here every Wednesday and on Saturdays from 3 to 4 on WBEN, and we're on BBC on Wednesdays. So and by the way, you don't have to wait for a TV show or a radio show to ask a tax question. You can go to our website at egtax.com. We're there to help you all the time, 24/7. All right. We got Dominic, our roving reporter, out in the field. Dom, what do we got? Mr. Golias, the Tax Lady. Hey, thanks for joining us again for another segment on Ask the Tax Lady. We hope you'll join us every Wednesday here on WBBZ, Saturdays from 3 to 4 on WBEN. We want to help you, and more than anything, when you think taxes, think EG Tax. You can visit our website at egtax.com. Until next week, I'm Esther Golias with Christopher Fabian, Tiffany Fabian. We want to help you. Have a great week.